Welcome back. Now, according to Stats SA, in the second quarter of this year, there was a 16.7 million employed people in the country, with the number of unemployed persons growing by 158,000. These changes resulted in the official unemployment rate increasing by 0.6 of a percentage point to 33.5% during the period. Kevin Lings, chief economist at Stanlib, joins us to put the data into perspective for greater understanding of the country's labor picture. Thank you so much for your time, Kevin. Not a great picture that we are seeing there. And for me, it's quite surprising. It's really a curveball, considering the fact that I would think that the economy was in a little bit of a better footing in the second quarter.
It is a surprise. The market was expecting the unemployment rate to actually improve in the quarter. Not dramatically, but there was the hope that it would get slightly better. So the fact that it's moved up, I think, quite a lot in one quarter, that's definitely a surprise. And as you say, the economy, it feels like it should be in better position, right? Because we've got more consistent electricity production. And obviously, we've still got the elevated interest rates. But the fact that we've been able to eliminate load shedding should naturally help the economy in terms of just broadening out economic activity. So you would have expected a slight improvement in the employment situation. I would describe this as a shock move in the wrong direction. And also when you consider that the breakdown of the job losses during the quarter was fairly broad-based. It wasn't as if it was just one or two sectors. There were a couple of sectors that lost jobs in the quarter. So I think it's a concern, and it's telling us that keeping the lights on is not in itself an answer. We've got to do a lot more to get the economy going.
Yeah, that is actually, it really just induces a lot of nerves, because of the fact that we thought that this whole time that load shedding was really the Achilles heel, but it turns out maybe it might not be. But at least, I mean, you talk about this being a shock move. Could it maybe have been a little bit of election jitters? I do understand that. Also, there's also the narrative that, yes, there maybe were more jobs created because of the electioneering, but maybe it was a little bit of, nervousness around the private sector to kind of hold off on things a little bit. Is that maybe not a factor here?
It might have been a factor. You would have had some jobs created because of the election, right? Because the IEC, it employs a huge number of people, and then you do have a bit more activity when it comes to the printing of posters and general campaigning. So you would have thought that that would have helped. Jitters, maybe, but would you have cut jobs as a consequence of being a bit unsure about the election? I think that's a bit of a stretch. If you look at the job decline, particularly in the trade sector, over 100,000 jobs lost in basically retail trade. That doesn't speak to me about a sudden loss of, or sudden concern about the election itself. It speaks to me about the fact that the consumer is under significant pressure, and we see that in a range of indicators, and the consumer pressure seems to be intensifying. It doesn't seem to be lessening. And obviously part of that relates to interest rates. Part of it relates to the fact that the Minister of Finance didn't give us tax relief in terms of fiscal drag. So I think broadly it's telling us the consumer remains under significant pressure.
What was also interesting to me is that the working age population actually increased by 137,000. Does this also maybe signal a deeper problem, is that although we have a wider working age population, that just how difficult it is for one to get a job, even though they are of an age to be able to work?
That's right. So if you look at the breakdown, getting your first job is the most difficult thing. The data shows us that once you've got a job and you've got some experience, then your ability to, even if you lose your job, your ability to regain employment is a bit better, is a bit higher. Getting your first job opportunity is clearly where the big challenge is. And so when you look at youth unemployment, you end up with 60% youth unemployment. And part of that is we're just not creating an environment where young people are given opportunities. Because our feeling is once you get that opportunity, once you gain some experience, you naturally become more employable. So if you had to break down the unemployment problem and narrow it into its key focus, it's youth unemployment. We've got to find a way to get young people into the labor market and gain at least some experience, and then I think they become naturally more employable.
Yeah.
So right now, under these circumstances, yes, it's difficult to get a foothold in the labor market. And obviously, as long as the economy is only growing at 1%, it's very unlikely that we'll see a massive expansion in job opportunities over the next year.
Yeah.
So if you've got a job, the message has to be, you've got to be careful and ensure that you retain that position, because it's not easy to move around in the labor market.
Yeah. On the back of these numbers, of course, we now have a government of the GNU in which all of the parties were basically saying something about adding jobs as part of their manifestos. Is the job looking a little bit harder than what the manifestos seem to have suggested?
Very much so. So obviously politicians brag about what they can do, but the reality is much tougher than that. And creating jobs is not an easy thing. It's not an instant. Yeah. There's no doubt in South Africa that in order to lift the labor market, we've got to fix the infrastructure. It's hard to imagine that business suddenly decides to expand and employ more people without better infrastructure. And that infrastructure includes things like railway systems, port systems, water systems. Yeah. There's a myriad of factors that we've got to get better. Yeah. The hope, of course, is that with the government of national unity, there is more focus on private-public partnerships to drive infrastructure development. It has developed nicely. It is making progress. And so if we can continue that reform and we can draw the private sector into more investment opportunities to alleviate the infrastructure backlog, then I think it's natural to expect that more jobs will become available and the labor market will look better. But realistically, how quick is that going to happen? It's a multi-year strategy. It's not as if you can suddenly turn this around within 6 months. Clearly, if we started to cut interest rates, which we think happens next month, that starts to help. The two-pot system, it'll give us a bit of a sugar rush at the end of the year in terms of a bit of consumer spending. It's not the way to try and grow an economy, but maybe at the margin that helps. But realistically, in order to see a much more vibrant labor market, it's a multi-year strategy to lift infrastructure or to alleviate the infrastructure backlogs and then try get broader fixed investment unfolding.
All right. Well, thank you so much for your time and for your insights there, Kevin. Really appreciate it. That was Kevin Lings, Chief Economist at Stanlib.